Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate secrets into plain English. Today we're looking at Option Care Health, and let's just say they're making some big moves and hinting at even bigger plans. So buckle up before we dive in if you enjoy getting these deep dives into company filings without the corporate jargon. Make sure to hit that subscribe button and join our Discord community, linked below, for even more exclusive insights and discussions. So what exactly is this report all about? It is a Form 8K, which is basically a company's way of telling the public about some pretty important stuff that is happening, and it is not always expected. Think of it as the corporate equivalent of a surprise announcement. The earliest date connected to this report is the 9th of January 2026. This means something significant happened on or about that day that the company needs to share. Now, let's get to the juicy part on the 12th of January. Just a few days after that, the 9th of January date, Option Care Health released some preliminary financial results. These are for the last 3 months and the full year of 2025, and they also gave us a peek at what they expect for the entire year of 2026. This is super important because it gives us a snapshot of how the company is performing right now and their outlook for the near future. Following that, on the 13th of January, Option Care Health was scheduled to present at the 44th Annual JP Morgan Healthcare Conference. Companies often use these big conferences to share updates and talk about their strategy, so it is a good place to look for more clues about where they're headed. But here is where things get really interesting on the 9th of January date. So before they even announced their preliminary earnings, the company's board of directors made a big decision. They approved an increase to their share repurchase program. Now, this program was already set to buy back up to $500 million worth of their own stock, but they decided to supercharge it, boosting the authorization to a massive $1 billion. That is a doubling of their buyback power. What does this really mean? When a company buys back its own shares, it signals a couple of things. First, they likely believe their stock is undervalued, meaning they think it is a good investment for the company itself. Second, reducing the number of shares outstanding can boost earnings per share, making the company look more profitable on a per share basis. Which investors typically like. This also means they have a lot of confidence in their future cash flow to be able to spend such a huge amount on repurchasing stock. This program doesn't have a set end date, which gives them a lot of flexibility on when and how they choose to buy back shares, whether it is through normal market trading or other more complex methods. It is also worth noting that Option Care Health's common stock is traded on the Nasdaq Global Select Market under the ticker symbol OPSH. This tells us they are a publicly traded company whose shares are available for anyone to buy and sell on a major exchange. We also have a couple of key documents attached to this report. Exhibit 99.1 is that press release with the preliminary financial results we talked about, and Exhibit 99.2 is the presentation they gave at the JP Morgan Healthcare Conference. These are the primary sources for understanding the company's financial performance and strategic communications. Now, let's try to put this all together. Option Care Health is signaling strong financial health and confidence. They're proactively increasing their share buyback program, which is a powerful statement. While we don't have the detailed financial statements in this specific report, the preliminary results and the significant increase in the buyback authorization suggest they are seeing positive momentum and expect to generate substantial cash flow. From a strategic perspective, a massive share buyback like this can be a double-edged sword. On one hand, it shows management's belief in the company's long-term value and can boost shareholder returns. On the other hand, it diverts capital that could potentially be used for acquisitions, innovation, or investing in future growth. Given their industry, which often involves complex healthcare services, it is crucial to see if this capital is being reinvested wisely for long-term sustainability, or if it is primarily aimed at short-term stock price appreciation. In conclusion, Option Care Health is making a bold move with this expanded share repurchase program. It indicates a strong financial position and a confident outlook. The key question moving forward will be to see how these preliminary results materialize in their full financial reports and how they continue to balance returning capital to shareholders with investing in future growth. We'll be keeping a close eye on their next filings to see if this bold strategy pays off. Alright, that is our breakdown of Option Care Health's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the increased buyback is a smart move? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And of course, subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord community linked in the description. Thanks for watching, and we'll see you in the next video.